There is this kind of magic trick that happens on millions of porches across the country every single day.
Oh, absolutely.
You just go onto an app, you click a button, and then like a day or two later, a smiling blue box with the word Chewy printed on it just materializes at your front door.
Right.
It feels so simple, so completely frictionless, like this pure retail magic for you and your dog.
Exactly. It's the illusion of absolute convenience
Yeah.
because you, as the customer, you don't have to think about the massive gears turning behind the scenes.
No, not all.
You just know that the kibble arrived
Yeah.
before the bowl was empty.
Right. But the thing is, if you pry open that blue box and really look at what is inside, the magic trick kind of disappears.
It really does.
And what you find in its place is a multi-billion-dollar hyper-complex machine.
Mm-hmm.
So, welcome to this deep dive. Today is Wednesday, March 25th, 2026, and our mission today is to explore a fascinating document that was released literally just today.
Fresh off the presses.
Exactly. It's the latest annual SEC 10K filing for Chewy Inc. And look, we are absolutely not going to just read you a dry corporate spreadsheet.
Nobody wants that.
Right, nobody wants that. Instead, we are going to use this filing as a window into a massive cultural shift.
Yeah.
We are unpacking how basically a simple online pet food retailer transformed into a $12.6 billion health and lifestyle behemoth.
It's wild.
It is. And more importantly, we want to look at what the raw data in this document reveals about our deep, evolving psychological connection to the animals living in our homes.
I am thrilled to get into this with you.
Yeah, me too.
Because SEC filings, they're notoriously dense.
Oh, the whole.
They're packed with legal disclaimers and heavy financial jargon that usually puts people right to sleep.
Right.
But if you know how to read the fine print, the 10K is actually one of the most honest narratives a public company ever publishes.
That's a great point.
It strips away all the marketing. It shows you exactly where the money is moving, where the vulnerabilities are, and what risks literally keep their executives awake at night.
Which is exactly why you are here.
Well, I try.
To cut through all that corporate speak and find the actual story hiding in the numbers, because as I was looking over the notes you pulled from this 10K, the sheer scale of Chewy's operation blew my mind.
It's massive.
But before we get to the billions of dollars, we have to start with the psychology that makes those billions possible, right?
We do.
Because the industry has a specific term for it.
They do. They call it pet humanization.
Pet humanization.
Yeah. And the market data included in this filing is staggering.
What are we looking at?
According to their research, 93% of U.S. pet owners now consider their pets to be a literal part of their family.
Wow, 93%.
Right.
Yeah.
And even more telling, 74% actually refer to themselves as pet parents.
Pet parents. It's so common now we don't even blink, but think about what a massive shift that is.
It changes the entire economic model of the industry.
How so?
Well, when a pet is viewed merely as a piece of property or like a working animal, you buy it standard fuel.
Right. Just basic kibble.
Exactly. It's an expense.
Mm.
But when a pet is viewed as a child, a dependent,
Mm-hmm.
you invest in its health, its wellness, its happiness.
That makes sense.
And the filing points back to an incredible statistic from the American Pet Products Association.
Okay.
It's regarding the 2008 to 2010 recession.
Oh, that was a rough time.
It was a severe economic downturn. And during that period, U.S. consumer spending on entertainment dropped by 7%.
Not surprising.
Housing spending dropped too, but spending on pets,
Yeah.
it actually grew by 12%.
Wait, really?
Grew by 12%.
That is wild to me. People were literally cutting their own entertainment budgets. They were downsizing their own housing costs before they would even consider compromising on their pets.
Because you simply cannot explain a macroeconomic recession to a hungry golden retriever.
That is so true.
Pet spending has essentially shifted from a discretionary retail category to a non-negotiable household necessity.
Right.
And Chewy's 2025 financials prove they are essentially monetizing that exact psychological reality.
Okay, let's hear the numbers.
Last year, they hit $12.6 billion in net sales.
Wow.
That is driven by 21.3 million active customers.
Okay.
And those customers are spending an average of $591 each over the course of the year.
Okay, let's unpack this, because people aren't just logging on and randomly browsing for a new leash, right?
No.
There is an engine driving that $12.6 billion.
A massive engine. The core of their business is their subscription program,
Autoship.
Autoship. In 2025, Autoship alone brought in a staggering $10.5 billion.
Wait, hold on. 10.5 billion just on recurring subscriptions.
Yes.
What percentage of their total sales is that?
It accounts for 83.3% of their total net sales.
See, when I look at that, it makes me wonder. Because it operates exactly like a modern-day utility bill.
It really does.
You pay for your water, your electricity, and your dog's food.
Yep.
So is this $10.5 billion success really just about convenience? Or has Chewy effectively hacked our guilt?
What do you mean?
Well, are they monetizing the underlying anxiety that we as busy pet parents might somehow forget to feed our furry children?
What's fascinating here is the sheer power of that subscription model from a financial perspective.
Okay.
Regardless of the psychological driver, whether it's driven by convenience or guilt, achieving over 83% recurring revenue is the absolute holy grail of e-commerce.
Right, because it's guaranteed money.
Exactly. Think about it mechanically. Most traditional retailers wake up on January 1st sweating over how they are going to convince customers to walk into their stores this year.
Oh, sure.
Chewy wakes up knowing that roughly 8 out of every $10 they made last year is already scheduled by an algorithm to hit their bank accounts again.
It's locked in.
Oh, completely.
Because you don't even have to make the choice to buy every month. You actively have to make the choice to cancel. And let's be honest, canceling takes effort.
Precisely.
Yeah.
It creates unmatched financial visibility.
Mm-hmm.
It insulates the company against economic downturns because they've successfully turned an optional retail purchase into a fixed, automated household expense.
So once a company has over 21 million people buying kibble and cat litter on autopilot,
Yeah.
I mean, they've captured the absolute base of the pyramid. They know you, they have your credit card, they know your dog's name.
They have all the data.
Which naturally leads to the question, what is the next logical, high-margin step to take all those customers?
And the 10K filing makes that pivot painfully clear.
What is it?
It's healthcare.
Healthcare.
Chewy is undergoing a massive transformation from a simple retailer delivering bags of food to a full-blown healthcare provider.
Oh, wow.
They are now operating the #1 pet pharmacy in America.
Number one.
#1. And they aren't just shipping mass-produced heartworm pills either.
Okay.
They're actually offering compounding medications.
Hold on. For those of us who aren't pharmacists, what exactly does compounding mean in this context?
Well, I mean, it basically means customized pharmaceutical-grade medicine.
Oh.
Let's say your cat needs a specific hyperthyroid medication,
Right.
but your cat absolutely refuses to swallow a pill.
Oh, I've been there. It's impossible.
It's a nightmare.
Mm.
So a compounding pharmacy can take that exact medicinal active ingredient
Mm-hmm.
and mix it into a transdermal gel.
A gel?
Yeah, a gel that you just rub on the inside of the cat's ear.
Wow. Okay, that is an incredibly sticky service.
Extremely sticky.
I mean, if my cat needs a customized ear gel to stay alive, and Chewy is the one mixing it and delivering it reliably every 30 days, I am never leaving Chewy.
Exactly. The switching cost for the consumer is just too high at that point.
Right.
And they haven't stopped there. They've also launched Care Plus.
What's that?
That's their suite of pet insurance and wellness plans,
Oh, of course.
alongside a telehealth service that is literally called Connect with a Vet.
It feels a lot like Amazon buying One Medical, but for dogs.
That is a perfect analogy.
They want the whole ecosystem.
They really do.
But as I read through the outline, the thing that really shocked me was their physical footprint.
Ah, yes.
Because they aren't just staying online anymore.
No, the biggest leap detailed in this filing is into brick and mortar.
Which is wild for an e-commerce company.
It is. But by the end of 2025, they expanded to 18 physical clinics.
Okay.
They're called Chewy Vet Care, and that is up from just 8 clinics in 2024.
That's rapid growth.
They're doing routine appointments, urgent care, even surgeries.
But wait, as I was looking at the risk factors outlined in the 10K, I noticed what seems like a massive contradiction.
What did you see?
Well, Chewy has this software called Practice Hub.
Right.
And according to the filing, it is now used by about 20,000 veterinary practices.
That is correct. That represents roughly 50% of all veterinary clinics in the U.S. using Chewy's platform.
Right. So Chewy gives local vets this shiny, helpful software to manage their clinics, handle their inventory, process prescriptions. It's like a Trojan horse. But the filing also specifically warns that some local veterinarians are actively resisting.
Yes, they are.
They are refusing to authorize prescriptions to Chewy, or they're trying to discourage owners from using them. So aren't they playing an incredibly dangerous game here?
How so?
Well, they are trying to partner with the exact same local independent vets they are actively competing against by opening up these Chewy vet care clinics right across the street.
If we connect this to the bigger picture, you have hit on the central tension of their entire corporate strategy.
Okay.
It is a very delicate tightrope.
Mm.
But Chewy's ultimate goal isn't just to be a friendly software partner to local vets.
Right.
Their goal is to become the inescapable infrastructure of all pet care.
But how does that friction actually play out for you, the pet parent?
Mechanically, it's a battle over convenience.
Uh.
A local vet might say, look, I'm not going to click approve on this Chewy prescription request because I want you to buy the medication directly from my clinic.
Right, they want the profit.
Exactly. So they force you, the pet owner, to physically drive down to the clinic, pick up a paper prescription, and then mail it in yourself.
Wow.
They introduce friction to protect their own pharmacy margins.
Which is incredibly annoying for the customer.
Highly annoying.
Yeah.
And that is exactly why Chewy is opening their own competing clinics. It's a hedge. If local vets revolt and refuse to authorize prescriptions, which, as you noted, is a stated risk in the 10K,
Right.
Chewy simply says to the customer, no problem, avoid the hassle. Just bring your dog to a Chewy clinic and see a Chewy vet.
That is ruthless.
By embedding their software in independent clinics while simultaneously building their own, they are systematically securing their position at every single touch point of a pet's life.
From the food bowl to the operating table. But, I mean, building 17 massive fulfillment centers and operating an entire healthcare network that burns through cash.
Oh, absolutely.
And it requires flawless logistics because delivering on that ecosystem, shipping 190,000 different products overnight to over 80% of the U.S. population is a monumental task.
It's a logistical marvel.
And here's where it gets really interesting. Because Chewy is famous for this incredibly empathetic small-town customer service, right?
Right, the handwritten notes.
Yes. They send out these cute hand-painted portraits of customers' pets. They send flowers when a pet passes away.
Mm-hmm.
But the reality of their back-end operations, as outlined in this 10K, sounds incredibly intense.
The contrast between those hand-painted portraits and the raw industrial mechanics of their logistics is just stark.
Yeah.
I mean, to make that personal touch happen at scale, they rely on 17 fulfillment centers spanning nearly 10 million square feet of warehouse space.
10 million square feet. And the filing details heavy reliance on artificial intelligence just to make all those boxes move. How does that actually work? Are there robots packing the boxes?
Well, robotics are a big part of it, yes.
Yeah.
But the real magic is the predictive AI.
Okay.
Remember Autoship?
Yeah, the recurring revenue engine.
Right. Chewy's AI knows the average consumption rate of a specific breed of dog eating a specific brand of kibble.
Wait, really?
Yes. The algorithm can predict that your golden retriever is going to run out of food next Thursday.
That is crazy.
So days before you even realize the bag is getting low, the AI has already routed that specific bag of food to a fulfillment center closest to your zip code.
Wow.
It staged it, and it prepped it for shipping.
That is brilliant, but it also sounds incredibly fragile.
It is.
Because the 10K details intense risks regarding global supply chain disruptions, heavy reliance on third-party cloud providers like Amazon Web Services,
Right.
and a constant barrage of cyber threats. It actually mentions DDoS attacks.
Yes, it does.
What exactly is a DDoS attack, and why does it matter for dog food?
Okay, so a DDoS attack, or distributed denial of service, is basically a digital traffic jam engineered by a hacker.
A digital traffic jam.
Right. Imagine Chewy's website is a physical store with just one set of double doors.
Okay.
A DDoS attack is like a cyber syndicate, sending 100,000 fake customers to stand tightly packed in front of those doors, all at exactly the same time.
So no one can get in.
Exactly. Real customers can't get in to buy anything, and the store's servers get so overwhelmed by the crowd that they just crash.
Wow. So they are literally fighting off global cyber syndicates just to ensure a bag of cat litter arrives by Tuesday.
They are. And this raises an important question for you, the listener, about how fragile our modern conveniences actually are.
That's a really good point.
We just assume the digital economy is invincible.
Right. We click a button and expect the box.
But the 10K lays bare the vulnerability of purely digital e-commerce giants. If a hacker successfully executes a DDoS attack, or if a third-party cloud server at AWS goes offline, or if a severe weather event floods a regional fulfillment center, the entire illusion of convenience shatters instantly.
And people get very, very angry when their pet's food doesn't show up.
Oh,
It's
absolutely.
not like a delayed pair of shoes. I mean, you can wait a week for sneakers.
Exactly. The biological clock of a hungry animal does not care about a server outage or a freight bottleneck.
No, it doesn't.
Chewy's margin of error is razor thin because they don't have thousands of local retail stores where a customer can just walk in and grab a bag off the shelf if the website goes down.
Right. So expanding into physical clinics, automating these massive warehouses with AI, and fighting a constant, expensive cybersecurity arms race to protect the data of 21 million households,
It's a lot.
all of this requires a massive corporate structure,
Yes, it does.
which naturally begs the question, who is actually bankrolling this $12 billion machine?
To understand that, we have to look at their 2025 financial results.
Okay, let's look at the numbers again.
And it's a perfect example of why top-line revenue isn't the whole story. As we established earlier, their total net sales went up to an impressive $12.6 billion.
Huge number.
But their actual net income,
Yeah.
their profit dropped significantly.
Wait, it dropped.
Yes, it fell from $392.7 million in 2024 down to $222.8 million in 2025.
Okay, a drop of almost $170 million in profit, even though they sold more stuff.
Exactly.
Why the massive disconnect?
Well, the filing attributes it to a few operational things like increased outbound freight costs.
Sure.
Moving physical boxes across the country is just getting more expensive.
Right.
But the primary reason for the drop is purely accounting.
Accounting.
Yeah. In 2024, their profit was artificially inflated because of a massive benefit they received from releasing a valuation allowance on deferred tax assets.
Whoa, hold on. Releasing a valuation allowance on deferred tax assets?
I know.
That sounds like corporate word salad for, we found a loophole.
Sort of.
Stop right there and explain that to me like I'm a 5-year-old.
Fair enough. Think of a deferred tax asset, like an old gift card, or maybe a tax credit coupon that a company has.
Okay, a coupon.
But they aren't sure if they will ever make enough money to actually use it.
Right.
Because they aren't sure, accounting rules say they have to put a valuation allowance on it.
What does that mean?
It's basically a sticky note that says, assume this is worth 0 for now.
Okay, I'm with you. Sticky note says 0.
Right. So in 2024, Chewy's accountants looked at the books and said, actually, we're making so much consistent money now, we are definitely going to be able to use these old tax credits.
Ah, I see where this is going.
So they took the sticky note off, they released the allowance.
And boom!
Exactly. Suddenly, all those old tax credits flooded onto their 2024 balance sheet, making their profit look absolutely massive for that one specific year.
Ah, so 2024 was the anomaly because they just cashed in a giant stack of old coupons.
Precisely.
Okay.
2025's lower net income of $222.8 million is actually a much more accurate, normalized reflection of what it costs to run their business day to day.
That makes total sense.
Yeah.
But, even with that normalized profit, the 10K reveals some really surprising power dynamics about who actually holds the leash here.
It really does.
Because the document notes that Chewy is a controlled company.
Right.
A private equity consortium led by a firm called BC Partners controls over 80% of the voting power.
Yep.
And they do this through something called a dual-class share structure. Explain how that mechanism works.
So a dual-class structure is basically a way for founders or early investors to raise money from the public without giving up control.
Okay.
Imagine you and I buy a house together.
All right, we're roommates.
And we split the financial cost 50-50.
Okay.
But in the contract we sign, we agree that my vote counts 10 times and your vote only counts once.
Wait, what?
Right. So even though we own it equally,
Mm-hmm.
I get to pick the paint color, I get to pick the furniture, and I get to decide if we sell it.
And I just get to live there.
You just get to live there.
Yeah.
So at Chewy, the public can buy Class A shares, which get 1 vote. But the private equity firm holds Class B shares, which get 10 votes per share.
Okay, wait a minute. That sounds like a highly sanitized way of saying private equity completely rigged the game.
Well, it's a common structure, but yes.
Because if I, as a regular retail investor, buy Class A shares, I take on the financial risk.
You do.
But BC Partners keeps 80% of the voting power.
Right.
And reading further in the 10K, the board authorized a $500 million stock repurchase program.
They did.
Chewy is actively using hundreds of millions of dollars of its own corporate cash to buy back stock directly from affiliates of BC Partners.
Yes, that's in the filing.
How is that a good deal for the regular investor? The private equity firm is cashing out chunks of their investment using Chewy's own money, and they still keep all the control.
It is a controversial dynamic, and you are right to point out the optics of it.
It just seems wild.
Being a controlled company means regular public stockholders have virtually no influence over significant corporate decisions.
Right.
It even prevents Chewy from being included in certain major stock market indices, like the Russell 2000.
Which locks them out of a lot of passive index fund money, right?
Exactly. But to be objective, we have to look at the structural advantage this actually gives the company's management.
I'm listening. What's the advantage of having a private equity overlord?
It acts as a massive shield.
A shield?
Because BC Partners holds an iron grip on the voting power, Chewy is completely insulated from short-term activist investors. In a normal public company, if a hedge fund buys up 5% of the stock, they can start demanding immediate cost-cutting.
Right. Layoffs, things like that.
Layoffs or massive dividend payouts to boost the stock price for a quick flip.
Which is often at the expense of long-term growth.
Exactly.
So Chewy's management doesn't have to constantly appease Wall Street's demand for quarterly profits if they want to make a big, expensive pivot.
Precisely. It allows them to make patient, cash-heavy bets.
Like what?
Well, for instance, the 10K shows they took $175 million in pure cash just a month ago on February 2nd, 2026,
Okay.
to fully acquire a company called SmartPack Equine.
Equine, like horses.
Exactly, making a huge play into the horse health and nutrition market.
Oh, wow.
They are also undergoing a major multi-year project to modernize their entire finance IT architecture.
Which is not cheap.
No, it's incredibly expensive. And you can only make those kinds of massive infrastructure-level investments when you know an activist hedge fund can't suddenly vote you off the board for spending too much capital today.
That is a fascinating trade-off.
It really is.
So what does this all mean? If we pull all of these threads together, what is the journey we've just been on?
We've covered a lot of ground.
We have. Chewy isn't just an online pet food delivery service.
Not at all.
It is a highly calibrated, heavily guarded $12.6 billion ecosystem.
Perfectly said.
It is designed to capture every single dollar you will ever spend on your pet. From their first bag of puppy food, to their customized pharmacy needs, to their end-of-life veterinary care. And the entire machine, the AI algorithms, the Trojan horse veterinary software, the private equity maneuvers, all of it is fueled by this profound cultural shift where we now fundamentally treat animals as human dependents.
It is the complete and total financialization of the human-animal bond.
It really is. So, to you listening, the next time you see that iconic blue Chewy box sitting on your porch, you will know exactly what it took to get it there.
Yeah.
You'll understand the complex web of artificial intelligence predicting your order, the local veterinary software infrastructure capturing your data, and the private equity shield allowing the whole operation to grow without Wall Street interference.
It is a whole lot more than just kibble.
It absolutely is.
And, it leaves us with a fascinating concept to mull over as this trend accelerates.
What?
Well, if society and the massive corporate ecosystems that serve us now treat pets exactly like human children,
Right.
complete with telehealth, pharmaceutical compounding, and highly specialized health insurance. How long until we see radical legal shifts?
Legal shifts.
Yeah. If the economy has already completely redefined pets as family members, will the law eventually catch up?
Wow.
Will we start granting pets legal rights akin to human dependence and fundamentally changing the very concept of animal ownership?
That is a wild thought. A question that turns the whole idea of that magic blue box on its head.
Exactly.
If they aren't property, what exactly are we getting delivered? Well, thank you for taking this deep dive with us today.